Hey, welcome guys. It's Walter Peters here. I'm glad that you're here at the Naked Trading webinar. Welcome. It's nice to have you here. Now, if you ever have any questions or anything as we go, please type them in the chat box and we'll get to them. There's a bit of a delay, but that's all right. We'll get to your questions, I promise. So in the next 45 minutes, we're going to talk about a topic that isn't really one that you hear a lot about. Because I think there are a lot of assumptions, and I think many of those assumptions are wrong when it comes to trading. So let's kind of dig into these, and you can expand on those if you'd like. Anything is unclear, or you're kind of wondering why I said that or whatever. That's how we learn. So let's get into this. We'll talk about trading like your mentor, and then at the end of the session, we'll go about 45 minutes, and at the end of the session, we will look at the live charts. So if that sounds good to you, I'm ready to go. So I wrote a book called Naked Forex. I did a PhD in psychology. So I'm really into the psychology of trading. I find that's where I make my biggest gains. And one of the things that I think is interesting about finding a mentor is, well, for me, I didn't really have one. I had peers, but I didn't really have a mentor. When I started trading Forex, there was one book about Forex, and it turned out my friend who got me into Forex trading, he met the author of the book and told me that he didn't think that he was a very good trader. So we didn't really know where to start. What I ended up doing is, how many of you are familiar with the Think and Grow Rich story? Does anyone know that story? Think and Grow Rich? Well, essentially the idea is that you can create like a panel or a board of directors of people who you really admire. So let's say that you, like, for example, I really admired Abraham Lincoln, and still do. So, Abraham Lincoln might make it to your board. And what you would do is learn as much as you can about Abraham Lincoln and how he thinks, so that when you take an idea or a problem or a challenge or an issue to the board, you kind of know what each person is going to say. So you might have like Abraham Lincoln and Nikola Tesla and Einstein and, I don't know, maybe a famous king or queen or something, or somebody that, Mark Twain, or for example, a famous writer, or someone that you admire and you know a lot about, Steven Spielberg or something, and you take that challenge up to the board, and then you listen to what each person says. Now, of course, you don't have them there. Many of them are dead or whatever, but you kind of recreate what they would say. That's kind of what I did with my trading. Is I read as many books as I could in about a year, a little bit more than a year, about 14, 15 months, where I just kind of quit everything, moved to a different country, and I just read as many books as I could about trading. I couldn't get enough of it. I tried to learn all I could, kind of immersed myself in it. And I learned what different approaches would be when they see a certain chart. I know it's certain people would be looking at. Well, that's one way to do it. It's a long, drawn out, expensive way to do it. For me, it took 4 years plus to get to the point where I was finally feeling comfortable with my trading. But you may have gone a different path. You may have found a mentor that you like, somebody that resonates with you, somebody that you say, well, that approach makes sense to me. Okay. But I'm going to go over 3 reasons why you should not trade exactly the same way that your mentor does. And that first reason is right here on the chart. That is beliefs. Okay. So the reason why, so we're going to change this. Naked Forex is the book I wrote. Let's not talk about that anymore. I know a lot of you have read it. Why you shouldn't trade like your mentor. And then we're going to put that up here, and that's reason number 1 is beliefs. So while it might make, let's say that your mentor trades that, well, we could even use this strategy right here. Let's say that your mentor trades this pattern, okay? Your mentor says, you know what? This is the best trading pattern that you can see. The market's moved up. It started to make this little flag here. And so you can buy it off of the breakout of this. As soon as it trades above this little trend line here of the wedge or the flag or whatever you call it, then you're in the trade. Okay, let's say that's what your mentor believes. Okay, and so you think, you know what, that makes sense to me. Okay, but let's see what happens here. It actually does spike higher, doesn't close higher. I don't know if that would have triggered a trade. Maybe, maybe not. Then it trades lower. Okay. And then finally it trades lower, then finally it trades higher, and then finally it goes lower. So you probably would have been stopped out here because it did trade higher and then trade lower. So maybe you say, you know what, my mentor likes that pattern, but it's not really my style. So I'm going to go with something a little bit different. I understand where he's going with this, but maybe the trades that I'm looking for are more kind of a flat consolidation during a trend. So the market's trending, and then it just kind of makes a flat consolidation instead of that pattern, and I'll trade that. So I still like the idea of trading with the trend and all that, but I'm going to wait for the market to kind of go sideways for a bit and then break above that sideways chop, and then I'll get in there. So that might be something that you would do. So your belief is a little bit different. You don't believe in the strength of that, okay? You don't believe in the strength of that pattern. That's just an example. It could be you don't believe in the stochastic and your mentor uses stochastic, or you don't believe in the 50 EMA and your mentor uses the 50 EMA, or you don't believe what your mentor says about institutional levels on the chart, or you don't believe what your mentor says about depth of market or wicks on a candle or whatever. It doesn't really matter. You might take a core idea from your mentor, but you don't want to apply the complete 100% unfiltered strategy. You want to change it. And let me tell you something. And I've tested thousands of traders around the globe. I've given them a specific test, and you know what I've found? It's really interesting. What I've found is that the most successful traders I know, they don't come to me and say something like, hey, Walter, I took this trade, or I was back testing this system and I saw this happen, and, what should I do? Because the trade didn't work out. What did I do wrong here? How would you have seen this? How would you have taken the trade here? What would you have done? While that can be useful in the beginning in terms of like getting your bearings, the ultimate truth is this. The most successful students will take a seed of what they learned from another mentor. Maybe they take a seed of what they learned from me and somebody else and whatever, and that's what they build their success on. So I'll give you a couple of examples. I know a trader who he trades, he likes trading the big shadow, but he doesn't trade the big shadow with reversals necessarily. His bread and butter is to trade the market that's trending. He waits for it to consolidate and then print a big shadow, and that's where he runs and he's off to the races by taking that big shadow that signals the market's going to keep going in his expected direction, which is in the direction of the trend. Okay, so he's not looking for swing points in the market, although he does take those, but that's not his bread and butter. His bread and butter is to wait for a quiet, low volatility trend, wait for the trend to pull back and consolidate, and as soon as it does that, he's on the lookout for a big shadow, and it doesn't even have to be a perfect one. So my big shadow rules, which is the biggest candle, the last 6 candles, the higher high and a lower low. The close is up near the high or the low, depending on if it's bullish. The close would have to be up near the high. If it's bearish, down near the low. All those rules, it's got to trigger the sell stop or buy stop during the next 2 candles. All those things he doesn't adhere to. He just wants to see basically the body of the candle engulf the body of the previous candle, and that signals to him, okay, that's it. Trend is over, or retracement's over, and trend is going to start firing up again. And he bases everything off of that. I have another trader who is still using the big shadow because I think it's an awesome system, and a lot of traders can resonate with this. It's a special case of the engulfing candle. You can go back and look at the other videos on engulfing candles versus big shadows. But the main point here with this strategy is this: that when you when he trades it, he doesn't look for a swing point and look to take trade to another support level or resistance level or whatever. What he's trying to do is find all of the turning points in the market. So he's always in the market, and he'll be in a bearish big shadow until he sees a bullish big shadow. So let's see if we can find some examples for you on this chart. So let's say my friend was trading this chart here, and he really was more concerned about the bodies of the candles. And I'll show you how he did it. So he traded completely different the way I did. But, okay. So let's say that he took a trade here. All right. This is a bullish big shadow. So he'd take a trade. He would take a trade there. So he's going long there. Okay. So he's long, and then as soon as he gets a bearish big shadow that's really good, he'll go short. So in this case, let's say he'd go long here. Again, it doesn't have a lower low. I know that. It's not the biggest candle. Oh, actually, it might be bigger than this candle. Doesn't really matter. He wasn't concerned with that. He was always in the market. So he'd have a buy here, then he'd have a sell here. So he bought, so he would have been out a little bit of a loss on that first position. And then he stopped out on this next one here, right? So he's got two losers in a row, right? And now all of a sudden, he's got this ugly sucker right here, which is a big, ugly bearish candle. So he shorts it there. So now he's short, and he would stay short until he saw a really fat, huge, bullish big shadow, which would not happen until roughly there, I'd say. So then he would go long here, like that. So this one would have been good for, so these are stopped out. These are no, like these, well, this one's the first one is a very small loss. The second one's a full R loss. This one would have been a, maybe a 40 pip winner or whatever. So now we're long, and we're waiting for a big, fat, bearish big shadow, which we don't have. And we get stopped out on this wick here. Still not good. Wow. So this is going up. Didn't really have a nice bullish one down there. Let's see what happens. Again, this is not my system. Okay, here we go. So this is your bearish one right here. So he's short here. Again, I'm just interpreting his rules. So he's short here. So I say he's always in the market, but actually he would have been stopped out here, unfortunately. So that's going to happen, and he'd be waiting for the next signal, and I don't really see any viable. There's a bullish big shadow there, but these ones are all they're not very tidy. There's another one there. There's a few bullish ones along the way, but here you got a short, okay? And now he's got a long, this would be a long here. You'll see what happens with this is it only makes money when the market's swinging hard. Again, this one's going to be a few pip loss or a few pips gain depending. And then here's another short right here. So again, this one will be a small winner, very small winner of about 120 pips or so. And then you've got a loser or a short here, not a loser, a sell trade here until we get a nice big fat bullish candle, which is not really happening. Not really. So we survived this pullback. Another thing I noticed was, so your stop loss is here, right? He survived this pullback here. He did not move his stop loss to break even until a long time. It took him a long time to move to break even. Okay, this is a winner. This is nice. This is a nice one because it's going to end up good. So he would not go long here until he's got a huge bullish big shadow that says it's time to swing high. Now that's a potential. That's a potential one right there. I don't think he would take it because it's just not bullish enough. So I'm going to say no. Okay, there's it. That's the trade right there. Okay, so now here, this is what he was holding out for the whole time. He was holding out for this trade here. So this was the big winner that was good for about 520 pips. So you get a lot of these choppy ones. It's like trend trading. You get a lot of choppy trades, small winners, small losers, and then bam, you get a big one like that. So that, and then this one looks like it's going to get stopped out right here, right? So that one stopped out. Now he's flat. He's waiting. Could go long here, but I don't think that's bullish enough. I think it would have been better if it was a little bit more bullish. So now we're still waiting for something good. Kind of would be nice to get a bullish setup down here somewhere. There it is. There's the next one. So now he's long here. And I didn't mean to go, I don't want to go too much into this, but so now he's long and he gets stopped out. Okay. And now that's an interesting short signal right there. Should have scrolled slower, but, and then we've got another short signal right here. You got a long signal here. This would have been stopped out. His testing on the euro took like a $10,000 account to 2.2 million in 10 years or something like that. But the point is, he took the big shadow and he made it his own. So the number one thing I want to get across here is that you shouldn't trade. The reason number one you shouldn't trade like your mentor is your beliefs are not going to tie into your mentors. So in the case of trader number one that I was talking about, he really liked the idea of trading with the trend. So although he liked the patterns that I taught him or that he learned from me or whatever in the book, what he decided to do was to use those patterns in a trending market. That was really important to him. And then trader number two that I just showed you his system was, well, why not just take all of them? Because his belief was he wanted to be in the market when the market made a strong move. So he'd always be looking for a reason to get in the market or waiting for a reason to get out. But he was only waiting for the best big shadows that he thought sealed the deal and told him, okay, that's the end of the swing. The swing is over. That move is over. And as we know, the Forex markets like to move for some time and then chop around, then move the other way. And then they go down and then they chop around and they go up. And then they go up and they chop around and they go down. And that's the way that he saw the markets, and he took advantage of that. So they had totally different beliefs and they had totally different strategies that all came from the core idea of the big shadow. So that's the one thing I want to get across. Does that make sense, guys? Or any questions about that? So that's number one that I think is important is, you shouldn't trade like your mentor because your beliefs will not necessarily meet, they're not going to exactly match what your mentor's beliefs are, okay? Even if you trade, quote unquote, the same strategy. All right? Make sense? Cool. Excelente. So let's get to reason number two why you shouldn't trade like your mentor. We are sneaking along here. And number two is temperament. Now, temperament's kind of all-encompassing. Really what I mean by temperament is, I'll give you an example. So I know a trader and he, I'm not really training. That's a good question. Are you comparing a trend trader and a reversal trader when you talk about those two traders? That's a good point. Not really. What I'm talking, you could say that. So some traders like to swing trade, like trader number two. So trader number two, he uses that big shadow that signals the end of the move and beginning of a new. Now, of course, sometimes he's going to get stopped out and he's not going to be right. But his idea was the big shadow's pretty good at signaling swing points, and I want to be in the market because I want to capture those huge swings. The only way he knew that he could capture those big swings is when he was always in the market. So the goal was to always be in the market, to take that swing until you get another big shadow to reverse it. And then you take that one until you get another one to reverse that one, and so forth. Everybody who is not from the Euro area is a Euro hater. Yeah. I don't really know what that means. Sorry, I don't understand the question. I apologize. All I'm trying to get across here with point number one is, even if you like your mentor's core trading system, your beliefs and your mentor's beliefs are almost assuredly not going to be the same. And that's why it's critical that you identify your beliefs and pattern your strategy around those, especially your first strategy. It's easier to become more mentally flexible as a trader as you add more bows, arrows to your quiver, so to speak, or weapons to your arsenal, or whatever you want to, whatever analogy you want to use, flavors to your recipe. The point is that if you try, and this is what I'm trying to get across. This is the number one point from point number one, the main take-home message. If you think that you can find a trader who does really well trading and simply copy what he or she does, you are wrong. I hate to break it to you, but you are wrong. I mean, that's very clear. Okay, so the markets are full of traders who have given back money to the markets because they thought that they could simply, one, find someone who's really good, and two, do exactly what they do. Unfortunately, it doesn't work that way. Unfortunately, your beliefs and what you believe about the markets creep into your system, and your system slowly morphs or changes. Or or worse, you completely throw out the system for mentor number one and you move on to mentor number two. And then you find out that your beliefs don't precisely match up with mentor number two. So then you throw that one out and you find mentor number three. Anyone who's been in what I call the cycle of doom knows exactly what I'm talking about. And I know it because I was in it, where I was always looking for a better system. I would trade it for a little while. Because the system didn't meet my beliefs, as soon as I hit a serious drawdown, I would trash it, chuck it out the window, and look for something better. If you're in that cycle of doom, one thing that I would suggest is that you identify what your beliefs are. That's critical. What do you believe? And then you can now tailor your strategy, even if the core strategy, the core idea, like, is a big shadow or a wedge or a moving average something or other cross, or a Bollinger Band touch on the edge of the Bollinger Band, or whatever the idea is that you got from one of your mentors. The important thing here is that you personalize it. The best traders personalize these systems and make them their own. So a lot of the stuff that I wrote about in Bolkowski, that was in Naked Forex. That was a Freudian slip if I've ever heard one. A lot of the Naked Forex stuff that I saw, that was inspired by a guy named Bolkowski. Bolkowski has these very impressive volumes that I read during that year, that 15 months when I was studying trading, where he looks at all of these stock patterns and he talks about the percentages of the time that they work and this and that. And I said, wow, that's fascinating that you can just look at a pattern and trade off of that. And that kind of got me started in this whole Naked Forex thing. So Bolkowski certainly was my inspiration. He was definitely one of my guys in the round table, to use the Think and Grow Rich analogy. So, whatever it is that you want to use as your core idea and build on that, just know what you believe in. You believe in swing trading, you believe in trend trading, or you believe in reversion to the mean, or you believe in a breakout during the London Open, or you believe in a retracement during the Asian session, or whatever the heck you believe. Keep that in mind, okay? Because you're not going to believe what your mentor believes, and you're not going to be able to trade like he does. I'm sorry to say, it just doesn't happen that way. It could happen, but it's like 999 out of 1,000 times, a trader will not have the exact same core beliefs about the market that his mentor does, or her mentor does. Okay, all right. So the second reason why you shouldn't trade like your mentor is temperament. Temperament's really interesting because your temperament is there's a trader I know, he scalps and he likes to get in and out. He thinks that being in a trade is risky. He wants to get out as quickly as possible. So his temperament is not to wait with a trade. Okay. Now contrast that to me. I held a trade over the weekend, and that trade got stopped out. And in fact, it not only got stopped out, but it gapped over my stop. So this was I'll show you. Let me get the Euro CAD weekly chart. So I had a this was a very painful big shadow. Okay, this is the Euro CAD weekly. Okay, so this is a very good trade. Why? Well, the reason why it's was such a great, or I thought was such a great setup, and I would take it every time, is because the market had come up to this support level and found resistance here. So it broke through and it came back up and touched it. Okay, so I sold, and I thought it was going to go lower down to here, right, to these lows. It didn't. Not only did it come up, it went up and then it came down, and then it went lower, and then it came back up, and then last week it just went blam. And then guess what? Over the weekend we had the gap. Okay, so my stop loss was right here. Okay, here's my stop loss. Here, I'm gonna put the stop is right there where that red line is. And my entry price was down here, and I'll make this line blue. So usually I use blue to enter for an entry price, red for a stop, and green for a target. Okay, now, so here's what happened. Roughly 440 pips of risk on this trade, but actually it wasn't 440 pips because I had to lose another 80 pips. So it wasn't 440 pip loss. It was a 520 pip loss. So that's an example of when you thought you were going to lose 1 R. Everyone familiar with R? That's from Van Tharp. I thought I was going to lose 1 R, but I didn't lose 1 R. I lost like 1.25 R or something like that. So if you thought you were going to lose 2%, you actually ended up losing 2.5%, right? So that's an example of that. And that happens. Now, the reason why I bring this up is because my friend who does a scalping, guess what? He thinks it's crazy to hold a trade over the weekend. He doesn't even like to hold a trade over a few hours. He likes to be in and out of his trades. In and then bam, right back out. So that's, for him, it's crazy. His temperament is, no way can I hold on to a trade and sleep when I'm in a trade. Are you kidding me? I got to be in and out. Whereas I am more like, are you kidding me? You think you want me to sit in front of a computer screen and take a trade and make decisions and try and be rational? I know what the market does. It would be devastating for me if I had to make decisions based on the 5-minute charts. It activates my nucleus accumbens, that part of your brain that's activated during addiction and drugs and things like that. So I know nucleus accumbens is activated, and I don't want to be in that gambling mentality. So I don't want to be in the 5-minute charts. So it depends on what your temperament's like. If you can hold a trade over the weekend or over a day or over weeks like I can, then you can trade the daily, the weekly, the 4-hour charts. But if you can't do that, then you have to trade the lower time frame. And, I even consider the 1 hours to be lower time frame, really. So that's a really important thing. Are you able to deal with the activation of your nucleus accumbens? And we've done other videos, other webinars on this idea of the nucleus accumbens. It's a critical idea. So, cool. So why shouldn't you trade like your mentor? Temperament. If your mentor is okay holding trades over the weekend, over the weeks, and so forth, and you're not, that's another reason why. Because you have a different temperament. Or maybe your mentor can afford to sit 5 hours during the London Open and watch the market trade, but you're at work during that time, or you're sleeping during that time. So you can't, you're going to have to do something else. You're going to have to find a different time frame, a different approach. But a lot of it comes down to temperament. If you're very good at planning and waiting things out and you're patient, then you can trade the 4-hour, the daily, the weekly charts. If you're impatient, you just can't deal with that, but you make good decisions under pressure, then maybe you can trade the 5-minute charts. All depends on your temperament. Does that make sense? It really, and it doesn't mean, like, for example, my friend, the one I was telling you about, the guy who does the 5-minute scalping. So I've taken his strategy And I'm currently right now testing it on the daily charts in Forex Tester. And the results are really good. But there's no way I would sit down and watch the 5-minute charts like he does. I just wouldn't do it. But the daily results, I mean, it's early days. I'm just starting the process of taking a look at this. But I find it fascinating that I can apply his same approach to the daily charts. It's amazing. Because and what I'm doing is I'm looking at his strategy through the temperament filter that I have, which is I'm not sitting in front of the charts for a couple of hours taking 5-minute chart trades. No way. All right, let's keep going. Is everyone cool with that? Everyone good with temperament? Does that make sense? After this, we are going to get to the last point that I want to make, and then we will get into the charts. Okay, so get your charts ready, get the pairs ready that you want to talk about, and we will jump into those right after this last point I want to make, which again is related to why you shouldn't trade like your mentor. So number one was because your beliefs don't match your mentor's beliefs. Number two is because your temperament doesn't match your mentor's temperament. And also, your schedule, temperament, I kind of lump that in with schedule. It depends on where you live. If you live in, North Carolina, or, let's say you live in Italy and your mentor lives in North Carolina. Well, then you guys are going to have totally different schedules. He's probably not going to trade the New York. He's probably going to trade the New York Open, and you might trade the London Open. All right. This is the last reason why. And I think it makes sense to have an illustration here, guys. Okay? So what I want to do is I want to, if you do this, if you actually do this, get something to write down right now. Get a piece of paper or a pencil or something and get that thing ready. If you don't have anything and you have like MetaTrader or some charts up there, you could just kind of write on your charts, like I've been writing on these charts, and you might use like a calculator or something. If you go to online calculator, just Google online calculator, you'll find an online calculator. If you don't have one on your phone or your computer, nearby, you can just Google online calculator. You should find one. But those are the two things I would say. Get a piece of paper and a pencil, or you can write on your computer screen and get an online calculator or a calculator on your phone or something like that. Okay? And we're going to do a little experiment. All right. So we're going to divide everyone into 3 groups. And if you do this, this is a really very powerful way to see goals in action. But if you don't do it and you just sit there and you go, that's cool, but you're just not going to get the value out of this, okay? So please try and do this. It's going to be really quick. What I want you to do is I want you to, you're going to choose a number, 1, 2, or 3, okay? And I want you to write that down on your piece of paper right now or on your chart or wherever you're scribbling it. So just choose 1, choose 2, or choose 3. How did I go about creating my own strategy? Basically 4.5 years of heartache. Right? 4.5 years of losing lots of money. And like I said, I don't know if you've been here from the beginning, Ryan. So basically I took what I learned mostly from Bolkowski, a little bit from Daryl Guppy, and I started testing different ideas. And what I found, my real leaps were taken with Forex Tester. Once I learned about Forex Tester, which is a trading simulator, which is bloody awesome. If you haven't seen it, here's a discount link. I do get a small commission if you buy it off my link, but you'll also save like $40. If you go to fxjake.com/tester. You don't have to use my link. You can just go buy it off their webpage, but you will pay more. But yeah, fxjake.com/tester. Forex Tester really got me going. It really did. It was amazing. Once I was able to take these ideas, like I'm doing with my friend's scalping strategy, and I'm using it on the daily charts. I'm doing things very similar to what he does. I'm just using the daily charts. That's what I did. I got a lot of ideas from Bolkowski books, from some of Daryl Guppy's books, which I found a little bit difficult to read. And I started applying those in Forex Tester, and I found out which ones seemed to work for me. So I knew that I didn't want to sit in front of the charts. I had enough of that.
and I knew that I wanted something where it was based on price action. It was pure naked trading. So it was based on Bolkowski's ideas. So I took those core ideas and I kind of tweaked them and went through Forex Tester. So the best way to build your confidence is Forex Tester or whatever, something like it. I think there's other similar softwares out there. In fact, I know there are because some people have told me about them. Like there's one for Mac, I think that's free or something. I don't know. But yeah, so hopefully that makes sense, Ryan. Okay, so let's do it. So you're going to choose a number 1, 2, or 3. Now, if you've chosen the number 1, I want you to think of this as your goal when we do this exercise, okay? This is your goal. Your goal, if you choose number 1, is to maximize your returns, okay? Make the most money you can make, all right? That's when I said 1, 2, or 3, if you chose the number 1, you're going to maximize returns. Now, if you choose the number 2, you are going to minimize your drawdown. Minimize your drawdown if you chose number 2. So you have a different goal. Every trader here who chose number 1, you're going to maximize your returns. And every trader here who chose number 2, you're going to minimize your drawdown. Okay? All right. And then finally, number 3 is your goal is this. If you choose number 3, you want to avoid a 10% drawdown. Okay? Avoid a 10% drawdown. So, just to recap, you need to choose a number. You've already done that. You've already written down. We know if you chose number 1, you're going to maximize your returns on this experiment. If you chose number 2, you're going to minimize your drawdown. And number 3, you're going to avoid a 10% drawdown. Okay? Bolkowski. Go to Amazon.com and look up. These are, his patterns are all, data is all based on the stock market, okay? So it's not Forex. So that's why I thought I had to go through a simulator like Forex Tester and make sure that the strategies worked. And they have different percentages and all that. It's not going to be a full translation. But Bolkowski, a lot of my ideas from my book, Naked Forex, came from Bolkowski. So Bolkowski was kind of the seed of my ideas, Naked Forex. I really owe a lot to Bolkowski. All right. I really do. I thought he was amazing, the stuff that he did. He's got lots of books out there too, all on patterns, and he'll tell you what the percentage of the time it works out and this and that, everything. It's awesome. And I'm working on another book too on new patterns that I've been testing and trading, and I'm going to release those too, just like he did. So it'll be a little bit different to the first Naked Forex book. It'll have more data in it, really. Okay, so now let's go through the experiment. Okay, so now what I'm going to do, guys, is I'm going to tell you what's going to happen. Okay, so I'm going to there's 3 possible outcomes for the trades that you're going to take with this trading system. Okay, everyone should be. Hopefully, you're aware of the idea of R. Okay, you're aware of R. R is the amount at risk. So I want everyone here to. We're going to have a small account. Everyone here has a $1,000 account. Okay, so you've got $1,000 or 1,000 euros or whatever, and I want you to decide when we do the next 10 trades how much you're going to risk on each trade. So that is your R. So R equals amount at risk, right? And that idea comes from Van Tharp. Van Tharp came up with that idea. Trade Your Way to Financial Freedom was the book. Now, again, one of the important books that I read when I did that, year of sabbatical. Okay, so the amount at risk. So now what I want you to do is know that when I draw the next 10 trades, there's a couple of different outcomes that can happen. Outcome number 1 is that you lose 1 R, okay? So outcome number 1 is that you will lose 1 R, okay? Outcome number 2 is that you will lose 5 R. So if you decided to risk $100 on your $1,000 account, if you were going to risk $100, and we pulled 5R, then that means you lost $500. Okay? If you're going to risk $10 and we pulled a 5R, you would lose $50. Okay? And so forth. And then the last possible outcome here with our trades is that you're going to get 20R. So if you were risking $100 on the trade, you would have made 2,000. Okay? So everyone here starts with $1,000. So now decide how much you're going to risk on the first trade. Okay? And we're going to do this experiment. Again, you're either going to lose 1R, you're going to lose 5R, or you're going to gain 20R. Okay? Let's go for it. And I'm going to use a random number generator on my other screen to get this. So it's all totally random, okay? All right, here we go. 10 trades, guys, 10 trades, all right? So decide how much you're going to risk, and then let's do it. And I'm going to okay. So we want to make 10 numbers between 1 and 10. Okay. All right, you guys ready? So that's six. Yeah. All right, let's go. So trade number 1 is a 20R trade. Okay? So you made 20 Rs. Trade number 1. So calculate where your balance is at from $1,000 and keep going. All right? Trade number 1 was 20R. Now you need to decide how much you're going to risk on trade number 2. Trade number 2 was -1R. So you lost 1R on trade number 2. Okay? These are all randomly generated on my other screen. I just punched it out. Trade number 3 is, again, 1R loss. Okay? Trade number 3 is a 1R loss. So now we're going to go to trade number 4. So we've had 3 trades. We had a 20R winner, was your first trade. Your second trade was a 1R loser, and your third trade was a 1R loser. Trade number 4. Decide how much you're going to risk on trade number 4, and we will draw it. Ready? Trade number 4 is a 1R loser. 1R loser. Trade number 4 is a 1R loser. Okay? Ready? Trade number 5. Decide how much you're going to risk on trade number 5. Trade number 5 is a 1R loser. Again, trade number 5 is a 1R loser. All right? So that's the end of trade number 5. Subtract that from your balance. And now we're going to go to trade number 6. Trade number 6 is, decide how much you're going to risk on trade number 6. Calculate that. And now trade number 6 is a 1R loser once again. You can see this trading strategy has a pretty low win rate. But we've had 6 trades. And trade number 6 here was a 1R loser. So 1, 2, 3, 4, 5, 6. Okay, trade number 7. You ready? Calculate your risk. And we're going to have trade number 7. And the result of trade number 7 is a 1R loser. So whatever you were risking, you lost that on trade number 7, unfortunately. Okay, now, you ready for trade number 8? 8. Hold on. Was that 6? 1, 2, 3, 4, 5, 6. That was 7, right? Yeah, that was 7. That was trade number 7. Am I correct in saying it was trade number 7? Yeah. Yeah. That was trade number 7. So just to recap, this is what we had. We had a 20R winner for trade number 1, and then we had a 1R loser for trade number 2, another 1R loser for trade number 3. Trade number 4 was a 1R loser. Trade number 5 was a 1R loser. Trade number 6 was a 1R loser. Trade number 7 was a 1R loser. And now we're up to trade number 8. Trade number 8, calculate your risk. And trade number 8 is a 20R winner. A 20R winner. So whatever you risk, you won 20 that. So if you risk $100, you made 2,000. If you risked $50, you made 1,000. Okay, on trade number 8. That was a 20R winner. Trade number 8. Trade number 9 is a 5R loser. 5R loser. So whatever you were risking, you lost 5 times that. So if you risked $50, you lost $250. If you risked $100, you lost $500 on trade number 9. Finally, our final trade, trade number 10, is a 1R loser. A 1R loser. Now, I want to ask you an honest question. How many traders here had an experience where you actually ended up losing money? So you didn't make any money. You start with $1,000 and you lost money. If you lost money, then maybe you were trying to maximize your returns, and it ended up you're just risking too much, and you ended up blowing up your account. How many of you who were trying to minimize your drawdown had a drawdown that was over 20%? For a lot of traders, 20% can be extremely painful. So if you're trying to minimize your drawdown, have a really low drawdown, and you had a 20% drawdown, which means you would have lost at least $200 from the beginning, that's terrible. And then number 3 is how many of you who are trying to avoid a 10% drawdown actually blew through that and lost more than 10%? So what's interesting is we all took the same 10 trades. It was the same exact trading system, same exact trades we all took. But because our goals were different, we had different results. I can guarantee you that some of you here probably made, $10,000. Some of you probably ended up blowing up your account within 5 trades, halfway through the experiment. So it depends on your goals. And that's what's so critical here, guys. If you don't know what your goals are, it's really hard to nail it down and get your trading right. You got to decide, what are you trying to do here? Are you trying to maximize your returns knowing that you're going to go through some crazy drawdowns or might blow up your account? Do you have all of your retirement money in trading and you're trying to minimize your drawdown? Maybe you're a bit older or something, and you don't really want to get too crazy. Or are you really conservative and you want to avoid a drawdown of 10% or X% or whatever it is? Well, then you can backwards engineer your system so that you don't hit that, right? And you can go to my calculator, which is free to check out. Go to fxjake.com/risk and use the calculator, backwards engineer it so you can avoid that 10% drawdown. Not all is sitting there for you right there, okay? So hopefully this has been useful, and these are reasons why you shouldn't trade like your mentor. I hope this really helps. What I want to do now is just open it up. Are there any charts you want to see? Guys, any charts? I was on some, let's see if they weren't looking so hot. Still hanging out. I had these gap trades. I was looking to close these gaps, but they would trace pretty badly against me. I might get stopped out on these, the euro yen and the yen. Those are 2 that I'm in. Still in the euro yen too, and the yen. My euro yen target's way down here. The yen actually was working out a little bit better, but they're both looking pretty ugly now. But it's early in the European session, so we'll see how these work out. Those are the 2 trades that I'm in right now, and the other one I'm thinking about taking is the New Zealand. Alexander blew his account 5 times. Wow. I hope it was the experiment that we did and not your real account, Alexander. So this one right here is the one that I want to take next. It's a belt trade. So see how, well, it's closed the gap here on the New Zealand yen. So that would have been a good one to trade, the gap. But the important point here is that it printed this big, huge bearish candle, and now it's traded lower than that. So I'm going to sell off the low. So I'm going to sell at 76.60. That's going to be my price, okay? That's my next trade that I'm going to take. If it doesn't get to 76.50, or I could be more conservative and go 76.58 or whatever, but I'll probably just go 76.60. And if it doesn't get there over the next 2 days and just go straight up, then I won't take the trade. But if it gets lower than that and triggers a trade order there today or tomorrow, then I'll take the trade. Okay, my stop loss is going to be up at the high here at 77.90. Okay, 77.90 is my stop. We'll take a look at the cable right now, okay? And then we'll shut it down. Okay, because I know we got to go, guys. Cable. All right. Okay, so to me, cables above a really critical level where you see all this resistance, and this is typically a consolidation pattern, and it breaks higher. So It's still quite bullish, actually. Unless it closes below here on the daily candle, and ideally a couple of days below here, I'm looking at this as simply it's gone up, it's consolidating, it's going to make another leg up. That's pretty clear. Does that make sense, Jamie? I hope that helps. Any other ones, or are we going to shut it down? So those that I've mentioned, I'm in the yen gap trade, I'm in the euro yen gap trade, and I am in, I'll probably be in the New Zealand yen if it works out. We'll see. The target would be 74.70 would be a pretty sweet target for this one, and then maybe a trailing exit or something like that. And that is our good friend, the New Zealand yen right there. Okay. So that's how I like. That's the other trade I like. CAD yen, euro. Okay, euro's a mess. I wouldn't really mess with the euro. I don't really have anything to say about it. I think it could be double topping here, but we don't really know. So maybe I'm not really sure. It's kind of in the area where it bounced there. It's really kind of a choppy. If it doesn't close this gap this week, it's probably going to go higher. To me, the euro needs to close that gap this week. If it closes this gap this week, then fine, it's going to go lower. But if it keeps pushing the high of yesterday, then we're going higher, I think. And then CAD yen, I think the CAD yen already. Yeah, it's in a draw. So CAD yen, if it breaks this trend line, it's probably going to go all the way up to this trend line, right? See that? So if it breaks the pink trend line, it's not pink yet, but it's going to be pink. If it breaks the pink trend line, it's probably going to go to the green one. So I don't know, but that I would be looking for it to fail, break above, bouncing, then go. If not, then probably you're looking at down around this area as a target, which is a little bit lower than it's been, right around 78, 79, 90. It's really 80 even is where that one is. Okay? Does that make sense? Cool. All right. Thanks, guys. I appreciate your time. I hope you have a wonderful trading week. I hope this was helpful. We'll see you at the next Naked Trading webinar. I wish you happy trading. Thanks so much for your time. And thanks to all of you watching the recording too. Thank you for your time. See you soon, guys. Bye. Take care. Bye.